Hello and welcome everyone to the week ahead commodity report for the 16th to the 20th of July 2018, presented by myself, Phil Carr, at the Gold and Silver Club. So during today's session we will be having a look at the commodity markets for the week ahead. Firstly, today we're going to have a look at the US dollar, because this will be very important now as we go into next week for some potential reversals in the market. So what do you need to know? Well, essentially the US dollar index on Friday broke out to 2-week highs, but then this move was faded, and I'll show you exactly what I mean here on the chart. So you can see here where the dollar index has broken out just below the 95 level, and then we've seen a reversal and essentially a bull trap here for the US dollar, where it's reversed into the close, and this has the potential to pick up more momentum to the downside next week. So moving back to commodities, if we have a look at the metals and the data that we got on Friday, we've seen hedge funds and money managers, they have cut their net long positions in COMEX gold contracts to a 2.5-year low, and we've also of course seen last week gold and silver prices break down to 7-month lows against the US dollar. So we have seen a significant decline in prices last week, and that was really fueled in part by the escalation in the trade war between the USA and China here, and that has caused overall strength in the dollar, and we've seen a number of commodities sell off against the US dollar over the last week. So let's have a look at that on the charts and how the trade wars are currently impacting commodities, and more specifically the metals. So first of all, if we have a look at gold here, gold on Friday revisited 1,236 US dollars per ounce, which is the swing low going back to mid-December, where we've seen the price bounce off that level spot on, and now we're getting a bit of support here into the close on Friday. What we want to look out for next week on gold is whether this level does hold of 1,236 US dollars per ounce. So we need to look at that on lower time frames as well. You can see here on the 1-hour chart, for example, where gold prices, they capitulated on a move down to 1,236 US dollars. We had a move back to 1,243 US dollars just within 1 hour, and then we've consolidated this move. And what we want to see going into next week is whether this starts to get a further bid, and whether we see a break back above the highs here on the lower time frames, which then leads into a break back above Thursday and Friday's highs, which then would take the price back towards 1250, 1255 and up to 1265 if this is a short-term low for gold. So that's what we want to look out for with the US dollar inverse correlation as well, whether this is going to pick up more momentum to the downside and give a little bit more support. On the flip side of that, if gold does not get any support next week and we drift lower and we retest 1,236 US dollars per ounce, if that level does not get a bid, so essentially if gold doesn't bounce off that level and we don't see buyers come back in, we could come back down to the next major level of support, which is 1,228 US dollars. And if gold really wants to flush out below that level, so over the course of next week, if we really don't see any support come in for gold, then likely rotate back towards 1,205 US dollars. That's if no support comes in for gold at these levels. Those would be the next major levels of support for gold, especially the 1,200 level, which would be a psychologically very key zone for gold to hold if we were to see more follow through to the downside. On Friday, silver prices broke down to $15.67 per ounce, and you can see here where we've also seen some support come in later on in the session after the sell-off with the dollar. You can see a capitulation move on the 1-hour chart here as well. We seem to be consolidating around this zone throughout most of the week here. It was a relatively strong close here on Thursday. However, the price action rolled over again on Friday, but then we've got some underlying support here which has come into the close on Friday. If we take this out to the weekly chart, we are again at a typical time of year where silver does tend to bottom. So if you go back over the last couple of years here, the lows for silver tend to come in December and July. If we were to see silver hold and consolidate at this level, it does need to reclaim back above $16 per ounce, hold above that level, and a critical area of resistance to break above at the moment is approximately $16.20 per ounce. To see silver break out and close above that level would suggest that the low is in. On the flip side of that, if silver does not get a bid next week and it rolls over and we revisit Friday's low, the next level of major support below that zone resides at $15.50 per ounce. And if we were really to see a flush out here for silver, it's not out of the question that we could revisit $15 per ounce, which would essentially take us back down to the swing lows here that we revisited in July of 2017. However, I would not expect the price to hold for long at that level before it starts to capitulate and gets a bid, much like we've seen on platinum. So when platinum came all the way back down to revisit $800 per ounce, we then saw a capitulation over a 490 point move that day, as we saw buyers come back into platinum at that very key 10-year level of support for platinum prices, which resides at $800. In actual fact, on platinum at the moment, we've just been consolidating over the last week. We're holding up around the monthly pivot at the moment, which resides at $830 here. What I want to see on platinum next week is whether we do hold on to this level, and if we get a bid and we break back above $850, we could then start to see more follow through. Certainly, if you look at platinum on a weekly chart as well, it's showing signs of a capitulation, which can be common after we see these capitulations in the market, that we revisit 50% of that move and then we get supported and we start to see a low get formed. So we want to see more evidence of that next week as to whether platinum will hold at this level, get a bid and break back above some of the resistance zones, which would then suggest the low is in. And then finally, moving over to oil prices, we discussed this on last week's energy report, where we saw a very significant sell-off on oil midweek on Wednesday. Brent crude oil here broke down over 6% over a 500-point move that we saw over the course of the US session on Wednesday, and we came all the way back down to major support at $73 per barrel. As we mentioned on that report, that was a level where we expected support to come in, and in actual fact oil came down and hit the targets that we had been anticipating oil to come down to over this sell-off. We have now seen a reversal into the close here on Friday, and we have also seen an increase in the overall net long positions from hedge funds and money managers as well. So they have increased their bullish bets on crude oil to the highest in nearly 3 months. And we've seen that price action over Thursday and Friday, where we've seen oil prices get well supported here, and we've seen certainly a bounce higher into the close here too, with oil rising 1% on Friday as strike actions in Norway and Iraq hit supplies, and we've seen that have a positive impact here into the close on Friday with oil prices too. If we have a look at the key zones here on crude oil right now, essentially on Brent crude oil, we are in a range now of $73 up towards $80 per barrel. So it's within a $7 range at the moment. The anticipation going into next week, if oil continues to get a bid, would be a rotation taking the price back towards $77 per barrel. That is the next major level of resistance here. On the flip side of that, if we don't see support continue for Brent going into next week, if it rolls over, breaks back below $73 per barrel, the next major levels of support reside at $71, and then below that at $70 for Brent crude oil. And then for WTI crude oil as well, WTI crude oil actually weaker into the close here on Friday. You can see where it broke out back above Thursday's highs, but we've seen a reversal. Still some weakness on that. On a weekly performance basis, WTI crude oil prices are down 4.5%. The reversal that we've seen for WTI crude oil over the last week has also come into a major level of overhead resistance on the weekly chart as well. So it's very visible where we've encountered overhead resistance here going back to May of 2017. WTI crude oil looks weaker going into next week than Brent crude oil. The next major levels I would look at, if it rolls over and sells off, I would look at $69 per barrel, and below that the next target would be $67 per barrel. If it holds up at the $70 per barrel level and we see oil catch a bid going into next week and we continue to rotate higher here, the next level that I would look to target would be approximately at $73.50 per barrel here for WTI crude oil. Going back to the US dollar index here, in my opinion, this should definitely be on your watch list as we go into next week. This breakout to 2-week highs and subsequent sell-off on Friday again shows that the 95 level is a very important level of resistance. We've now seen 5 attempted breakouts to clear that 95 level, and each time the US dollar has not been able to do that. We've seen reversals, and we're essentially in a range-bound market with the US dollar index, and it's been moving within this range over the last 2 months. And if we don't get a breakout above that level of resistance and we start to see more significant follow through to the downside, and if this is a failed breakout for the dollar going into next week, we've got the potential for quite a few reversals from extreme oversold conditions, particularly on a number of commodities. You do need to wait for confirmation, but potentially this is going to set up for some great trading opportunities over this quarter. Now, of course, if you want to be part of a community of successful traders, then join us at the Gold and Silver Club. As a member, you get live trade alerts delivered via WhatsApp, email, SMS. You have access to mentorship, expert advice, in-depth market analysis, and trusted insight so you can know earlier how to act quicker and maximize on trade opportunities. For more information and details on how to join the service, please go to www.jointhelivestradingroom.com. The link is also below this report in the description, so just click on the link, make an application, and we will get in touch with you ASAP. And finally, make sure you subscribe to our YouTube channel to be kept updated with the latest commodity reports.